The new Reserve Bank governor says she'll hike rates again if necessary. National Australia Bank lifts its forecast for house price growth this year, and Vegemite has its best sales in more than 2 decades. Welcome to Fear and Greed Business News, Australia's best business podcast. It's Wednesday, the 25th of October. I'm Adam Lang, and good morning, Sean Aylmer.
Morning, Adam. Are you enjoying standing in for Michael while he's off on holidays, writing books and sunning himself and things like that?
Gallivanting. Look, I am, but I still feel that sense of anxiety and nerves. I'm with you, Sean. I've got to lift my game.
That might be a reflection of me, not you, Adam.
I doubt it. Okay, now immediately after the show, stay listening for Sean's chat with Liam Connolly, who leads the energy transition practice at Bain.
Yeah, so Bain has just put out its 2023 Global Energy and Resources Report. We chat about some of the main obstacles and opportunities within the global transition to renewable energy, spending needs, critical minerals, executive and government behaviour, all sorts of stuff. It's a great chat.
Vast projects and vast amounts of money too, Sean.
So true. Huge amounts of money.
The main story this morning, strong growth in incomes and employment mean renters and low-income households are better off than they were 2 years ago. That's the pronouncement from new Reserve Bank Governor Michelle Bullock, and she wouldn't hesitate to lift interest rates again.
Probably won't win her a lot of friends given how many people are struggling to find accommodation they can afford. However, it's courageous. Speaking last night, Bullock said she wouldn't hesitate to raise the cash rate if there was a significant upgrade to inflation forecasts. Her comments come ahead of today's September quarter consumer price index reading from the Australian Bureau of Statistics, which many economists believe will tip the scales on a rate rise one way or another. When asked whether the Reserve Bank is behind the curve on inflation, Australia's central bank began lifting rates later than most other central banks, and it just hasn't lifted them by as much. Bullock said no, but conceded the Reserve Bank has been cautious. There were some nuances in her speech that showed the bank is worried about how many rate rises have occurred since May last year, and just the fact that we haven't seen the full effect yet. Bullock said the board is mindful that growth in demand and the rate of inflation have been moderating, and that there are long lags in the transmission of monetary policy.
Okay, Sean, so what about rents? Plenty of people out there are struggling just to pay their existing rent.
While rents are increasing at their fastest pace in a decade due to a nationwide shortage of homes, Bullock presented Reserve Bank research that shows renters have actually seen their spare cash flow improve since 2021. And that's all about income growth. Essentially, low-income people have gained more work and more hours in the hot labour market. People who own their own home outright are actually in the strongest position. They're benefiting from higher employment and interest income more than offsetting inflation. What she's really saying is because people have jobs and low-income people can get jobs, they're better off than it was a couple of years ago. Maybe, I'm sure that aggregated data is saying that, but there are still plenty of areas across the country where people are really struggling. Now, of course, all our attention turns to today's CPI figures.
So, Sean, how did local markets perform yesterday?
Well, Adam, the S&P/ASX 200 finished the day up slightly, reversing 3 poor sessions. By the close, the market had risen 0.2% to 6,857 points. Not quite a rip-roaring day, but I suppose better than going backwards. We talked about the miners getting trashed on Monday. Much, much better yesterday with Lynas Rare Earths, Core Lithium, Perseus Mining, Regis Resources and Pilbara Minerals all doing well. The more defensive stocks like healthcare companies, utilities, consumer staples, they're among the worst performers. Fortescue Metals Group was the best of the large caps, jumping 2%, while Rio rose 1.5%. Santos added 1%. Woolies and Coles were the poor performers, as was Newcrest Mining on its penultimate day on the market. Some good news in the buy now, pay later sector. Zipco reported a 32% jump in September quarter revenue. Its share price rose 8%. Wasn't so good for the medical glove and surgical suits group Ansell. Its share price fell 1% after it said the COVID-19 boom for the company would be over at some point early next year. The point there, of course, is that sales are still sliding at Ansell. And finally, commuter bus and tourism group Kelsian, previously known as Sealink, says domestic travel demand is holding up despite cost of living pressures. Kelsian operates businesses including Captain Cook Cruises on Sydney Harbour, Kingfisher Resort on Fraser Island, and the ferry to Kangaroo Island off South Australia. Its share price rose nearly 2%.
Sean, for a day that finished up slightly up, there sure were many moving parts. What's happening in international markets?
Oh, Adam, I'm so pleased you asked, because today it's all about bond yields. Now, Michael, I'd sit here with him and he'd roll his eyes as soon as I say bond yields. But you...
Not me, Sean.
I can see the glint in your eye. I can see that you love the idea of talking about bond yields. Now, yields on 10-year US notes hit 5.02% on Monday US time, highest in 16 years. Now, a couple of very high-profile influential investors, billionaire Bill Ackman and PIMCO co-founder Bill Gross, are saying it's time to buy bonds again. A quick explanation, which Michael would know. He would definitely be rolling his eyes at this point, but you're not. You're glued to whatever I'm saying. So yields rise when bonds are sold off. So when people don't want them, their price falls, yields go up. The recent sell-off reflects expectations of higher interest rates, though it's fair to say there's also plenty of reasons to like bonds, given the geopolitical and economic uncertainty around at the moment. Remember, bonds are really good places to be in bad times. Notwithstanding that, bonds have been sold off, yields have been rising. If you can get a higher return in the bond market, it makes equities less attractive, and that's part of the reason we've seen equities sell off. So this whole bond yield story has been so important over the last 6 weeks or so. Anyway, Ackman and Gross reckon the sell-off has gone too far. It's actually time to buy again. That pushes up the price of bonds, thereby lowering the yield, and that's exactly what happened. Whether it is the peak bond yield point, who knows? But when you get people like Ackman and Gross talking about it, you have to listen. Away from bonds, Bitcoin's recent surge continues. The cryptocurrency is now worth not far off $32,000 a unit. And Adam, copper prices have tumbled to their lowest point in almost 11 months. Given copper has so many applications, it's a great conductor of both electricity and heat, its price is seen as a bellwether for the economy. So a lower price of copper doesn't really augur well for the global outlook.
Ooh, an early indicator, Sean.
I like those.
We'll be back in a moment with the rest of the day's business news. Sean, Microsoft will invest $5 billion in Australia to bolster Australian cybersecurity, cloud computing and artificial intelligence capabilities.
The announcement made by the Prime Minister Anthony Albanese in Washington includes Microsoft partnering with Australia's cyber spy agency, digital skills training for 300,000 locals, and boosting the number of data centres across the country that Microsoft own from 20 to 29. It's a centrepiece announcement of Albanese's trip to the US. The Prime Minister will also hold talks with President Joe Biden and other congressional leaders, in part hoping to push the AUKUS-related legislation, which is currently gridlocked in Congress. Republicans have argued against the legislation, saying it could lead to fewer submarines being built for US defence forces. A little bit of argy-bargy to go there. Microsoft said the investment would increase the company's computing capacity by 250% over 2 years, helping Australia seize the opportunities of cloud computing and artificial intelligence. It's the company's largest investment in Australia in its 40-year history.
Sean, how many visits did you say our Prime Minister has had to America since election?
Wasn't it 9? We talked about this yesterday.
I think it's 9. Yeah, you mentioned yesterday. And this is just another outcome from those visits. Our working relationship seems to be getting tighter and tighter.
It does, although it would be very interesting to see. So from the 4th to the 7th of November, Albanese is visiting China. Xi Jinping, he will meet, sort of meeting Joe Biden one week, Xi Jinping a couple of weeks later. That's a tricky road to follow.
We can be everybody's friend, can't we?
We can. Adam Lang through and through, everyone's friend.
Now, Sean, this one to me is significant. National Australia Bank, one of the country's biggest home lenders, has revised up its forecast for property prices this year, estimating that they will rise 8% in 2023 and 5% next year.
And Adam, If you own a property in Sydney, as you do, Brisbane or Perth, prices could be up by 12%. Hobart remains a laggard, with prices tipped to fall this year by 3.3%, while the Adelaide forecast is nearly 9%. Melbourne's just 4.7%. NAB's Group Chief Economist Alan Oster says property prices continue to be supported by a significant supply-demand imbalance amid rising rates and reduced borrowing power. Oster thinks the increases will occur notwithstanding he's predicting another interest rate rise on November 7 when the Reserve Bank Board meets, and then steady rates until the second half of next year. NAB joins the list of market watchers upping their forecasts for house price growth this year. Even the new boss of the Reserve Bank, Michelle Bullock, last week said she was surprised by the strength and resilience in the Australian housing market.
Sean, if you own property, this is brilliant news. If you don't, it is really challenging.
Yeah, very difficult to get into some of these capital city markets for first home buyers.
Sean, moving on to something perhaps a little more heartwarming. Vegemite is having one of its best years in 2 decades, coinciding with its 100-year birthday.
So it's interesting. I haven't eaten the stuff for years.
What?
And I'm back on board though.
Oh, good.
Yeah, no, I'm back on board, and I'm back on the crunchy peanut butter.
Oh, good.
Thing too, because
yeah.
you have kids and you've got to get the smooth stuff. And suddenly the kids are getting a bit older. I'm buying crunchy. So I got crunchy peanut butter and Vegemite.
What a good Aussie you are.
Certainly on the Vegemite. Sales of Vegemite are growing at about twice the pace of the broader spreads category. That whole category is having a good year as well, growing at a 5% pace. It's actually worth about $700 million a year. Now, Bega Group bought Vegemite in 2017 from global food giant Mondelez International. They paid about $460 million. Last financial year, volumes rose for only the second time in 20 years. Bega Executive Chair Barry Irvin said a number of branded products, including Farmers Union iced coffee, Dairy Farmers and Bega cheese, were also having a better time of it. I wonder whether that's all about the home brands that the supermarkets pushed big into. Maybe there's a bit of a backlash against that, so we're actually looking for brands again. Certainly those branded products are having a better time than Bega's share price. It fell 2% yesterday. It's trading well under $3. That's down about 24% this year and more than 50% over the past 2.5 years. The current melee is due to a shortage of milk produced in Australia at a time when global milk prices are falling. Bega's having a tough time of it, but not Vegemite.
Sean, there's a few other stories around. New South Wales has retained its AAA credit rating.
Yes, Moody's affirmed the state's AAA rating and stable outlook status. Good news for that state. Also, suburban Canberra will be at high risk during the upcoming fire season, while Brisbane, Sydney and Melbourne are also facing an increased fire threat over December and January. Researcher Ken Cato from the disaster forecasting service Early Warning Network said vegetation growth in some suburban areas could mean a particularly tough season ahead, according to AAP. The warning comes just as some parts of the country are expected to hit 40 degrees today.
Sean, in international news, Israel sent tanks and troops into Gaza to carry out intelligence gathering raids, while its Air Force bombed Hezbollah positions in southern Lebanon.
It's in preparation for war, though there has been a fair bit of stalling ahead of a well-telegraphed major ground offensive. Israel said its incursions into Gaza went deep and were targeted at a squad of terrorists preparing for the next stage of war. Meanwhile, Israel's defense minister said the broader ground offensive could take up to 3 months. The Wall Street Journal is reporting that US officials are recommending Israel not rush into launching a ground offensive until Washington has the chance to get military assets on the ground and prepared for use. Also, Hamas said it released 2 more hostages, both elderly women, who were taken when it attacked Israel, but the possible release of a group of 50 captives has stalled over Hamas's demand that fuel be delivered into Gaza. The United Nations has called for an immediate ceasefire, but US President Joe Biden said that can't happen until all the hostages are freed.
Sean, it's a delicate balance between what is an intelligence gathering raid and what is a ground offensive into the territory.
It is such a difficult war to fully understand. And I'm sure that unless sort of as an outsider looking in, it's really difficult just to understand the passion and the belief on both sides. Let's hope that diplomacy prevails.
Sean, turning to oil and gas giant Chevron, they've agreed to buy Hess for US $53 billion, the second mega merger in the sector in just the past couple of weeks.
So Chevron's a number 2 oil producer in the US behind Exxon. It's clear that the board of Chevron believes in the long-term viability of fossil fuels because it's spending $60 billion US. That includes debt, so it's $53 billion plus about $7 billion worth of debt. The offer price is a 5% premium to the last closing price of Hess, which I must say isn't exactly generous. In recent years, some of the major players have underinvested in exploration. Part of that is because of the greening of the energy sector, but demand still remains really strong. It's a major reason for these deals at the moment. The other big one, announced a couple of weeks ago, is Exxon's $60 billion bid for Pioneer Natural Resources. You throw them together, turn them into Aussie dollars. That's about 190 billion Aussie dollars in deals this month. Fossil fuels are back in fashion, it seems, and being big in oil and gas really matters. That probably will play out with Santos and Woodside, though that is for another day.
Sean, right on topic. Up next is the Fear and Greed Daily interview with Liam Connolly, who leads the energy transition practice at Bain.
Yes, just as I mentioned earlier in the show, Bain has a global energy and resources report out. We talk all about the global transition to renewable energy, the good, the bad, and the ugly, Adam.
That's up next in the Fear and Greed playlist on your favourite podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Adam.
It's Wednesday, and of course that means there's a new episode of How Do They Afford That on your favourite podcast player today. It's a bit of a change-up this week with an interview with UniSuper's Matt Waraxo for a look at the type of financial advice that his team can provide, who it can benefit, and how much it'll cost. It's Wednesday, the 25th of October 2023. Make sure you're following the podcast. Join us online on LinkedIn, Instagram, X and Facebook, and have a great day.